Ready to finish the statement of cash flows, indirect method for Cleveland cash flows? I know I am, so let's see where we are. We just finished our cash from operating activities. Along the way, we did quite a bit with our investing activities, but this is the section we're going to finish right now. We're done using our income statement. That was really for the operating activities section. Now we're just going to be using the general ledger notes and our remaining balance sheet differences, which we don't have very many, to finish out the statement. So starting up here on the asset side, let's first just make sure we all realize here's our investing activities. Investing activities deal with long-term asset accounts plus some specific investment accounts, like those short-term investments. So everything has been taken care of except for this $125,000 change in equipment. If I look at the general ledger notes, I want to make sure there's not purchase of equipment and sales of equipment that offset each other. So I look in the general ledger detail, I only see information, well, we already looked at this, a sale of land, and now I'm looking at information about a purchase. So I see this purchase of equipment for $125,000. So that tells us what we need to know. So we come back here and we say, okay, this was all, that whole $125,000 was equipment that was purchased. This was actually item R is where we were. So this is going to be purchase of equipment. That's a cash outflow, right? That makes sense. You can also say, oh yeah, and it was a debit up above in the middle column, so it must be a credit down below when we get to the actual statement. Now let's see if we have anything else in the investing activities section we haven't taken care of. And I know from my handy dandy little formula here, check formula, that we've covered everything. We've exhausted all the possibilities for investing activities. If I haven't mentioned it recently, just a reminder, we're trying to explain the change in cash. It's a mathematical certainty that if I can explain all the other changes between these two columns of numbers, what I will be left with is indeed that change in cash that I haven't explained. So that's what we're doing when we keep trying to zero these things out. So we've taken care of the investing activities, so let's real quickly sum those up and make sure that we've got a number that makes sense. And when I say makes sense, I mean the number I'm looking for, because I know what the answer should be. From your standpoint, it will only make sense when we get to the end and it all matches the change in cash. But that's one of the nice things about the statement of cash flows is you know before you start what the answer has to be. All right, good. That's what we wanted to be. So this is my cash used for investing activities. It's negative $52,000. So that leaves us with the financing activities section. I'm just going to shorten this up a little bit. Maybe we can get it squeezed into a page. All right, financing activities. Going up to my balance sheet, what have I got left? Well, all I've got left are financing activities. They're in the liability and equity sections. Okay, it's those long-term liabilities and equity section. This AOCI is not ever going to involve cash, so I'm just going to put that as non-cash. And the retained earnings, we picked up that net income number. That was operating, but there's also some financing going on as well that deals with that $24,300. And you can think about what that must be, and you will be right. But let's look through here and just go down the list with our financing activities. The first one I come to is this long-term notes payable, which decreased from the beginning of the year to the end of the year. We know that would happen with a debit. So that is item S, decrease in long-term notes payable. I'm going to start that in my financing activities as retirement of long-term notes. So that is my item S. That would have been a use of cash. Let's see what our next item is. The next item is premium on our bonds payable. So the bonds payable balance didn't change, but the premium balance changed. And you know from chapter 14 that the premiums gets amortized over the life of that bond, and so that makes sense that it is smaller by 550. Now let's think about in terms of statement of cash flows, is that a cash item? And if you think about what the entry looked like whenever we recorded premium amortization, the rest of the entry, what surrounded that, it was in the interest expense entries. So we debited interest expense. We always debited the premium if we were the bond issuer, because it was a credit balance, we're trying to make it smaller. So we debited the premium, debited interest expense, and credited cash, which means that for a premium situation, the cash we paid out was always comprised of two pieces. It was the interest expense plus the premium, the piece of the premium. So yes, this should go on our statement of cash flows, the premium on bonds payable. Okay, and it's considered a financing activity. There is a video on within the modules that explains the premium and discount treatment on the statement of cash flows in more detail. But yeah, yes, that is going to be an outflow. Okay, it's part of that cash interest payment that we made. And the interest expense piece is up in the operating activities, but the premium goes through the financing activities. All right, so that takes care of the premium on bonds payable. Now we've got really just a couple of items left. We've got common stock and contributed capital increased by like 22,500. Let's look in the general ledger and see what that is. And looking for something that would change common stock, make it bigger, which sounds like some kind of IPO or something, or issue of stock. Here we go. Item number 6, they issued 10,000 shares in an IPO. All right, we can go with that. So that, whoops, would not have been a debit. That would have been a credit. Sorry about that. So there we go, 20,000 credited there, 2,500 credited in the paid-in capital in excess of par. That's what that says. So let's go ahead and include that as one line item. This is proceeds or issuance of stock, of common stock. That is a big source of cash, 22,500. I forgot to label this as my financing activities section, just to clean that up. All right, so let's see if we're done. Almost done. We're almost done with our worksheet anyway, not the statement, but with the worksheet. All right, we have one more item here to clean up in order to get everything to zero except our change in cash. And remember, once we have everything zeroed, then we have explained mechanically, mathematically, we've explained that 12,000 is what we're going to be left with. So retained earnings, what could possibly make retained earnings smaller by 24,300? You have your suspicions. We would want to look in the general ledger and see. And if you noticed item number 1 off the top of your list there, we paid dividends that totaled 24,300. Well, dividends would certainly have decreased retained earnings. In this case, we're assuming those are just cash dividends. So they're going to go on this statement of cash flows. If we had dividends that were property dividends, they would not be a cash outflow. They would have just adjusted the property account, would have been the other side. We would have debited retained earning and credited some property account. But here we know it was a cash dividend. So it's going to come out of there as a cash dividend. took care of everything. So now we have cash used for financing activities. Let's see if that is coming to the number I want it to be. I don't actually remember what that number is. All right, so on our worksheet, once we have the change from operating, investing, and financing, we can sum those up and get our change in cash. Now we know we want that to be 12,000, right? Because we know that's the change in cash. That's what I mean by, you know, when you start what you want the answer to be. There it is. Yay, it's exactly what it is. And look at that, our debit and credit column still balanced. That's all nice. We're not finished with the statement. If we were going to make the statement formal, really, we wouldn't put the numbers in two columns. We would just have positives and negatives. Make it look more, I don't know, user-friendly. But we would have at the bottom, it wouldn't stop with the change in cash. It does not stop with the change in cash. It starts with, the next line is the beginning cash, which we pick up off the balance sheet. Right, we're basically proving the change in cash on the balance sheet. That's what we're doing here. And the last line is going to be ending cash. We add those two together. It's got to be cash that matches, that matches our cash, ending cash on the balance sheet. Right? So not just on this worksheet, but on my formal balance sheet, it's got to be the same number, or my statement of cash is not correct. In our case, it is, which is awesome. All right, on the indirect method, there's a couple of disclosures that have to be added. And those are, on the face of the statement, has to be cash paid for taxes and cash paid for interest. To figure those out, you have to use some T accounts. So to figure out the cash paid for taxes, we would want to look at the taxes payable account. Here I'm just going to make a quick little T account. So much email. And for taxes payable, and we'll walk through how we get to the cash taxes paid. If I have the beginning balance in taxes payable, escape. It's a credit balance. Get that number. It's 4,000. And the ending balance is 5,000. And you're saying, I know we have a difference of 1,000. We already established that, and I agree with you. But I'm going to do it this way just to show you how it works. Okay, so what makes taxes payable bigger is every time we have tax expense. What's our tax expense? Is it showing up anywhere on the statement? No, it's part of our net income number. So we have to go back to the income statement and find it. So I'm going to look for it there. When we find it, I'm going to pick it up. There it is, income tax expense. Of course, I'm going to make it a negative number here. I want it to be a credit. Okay, so there's my income tax expense. That's the other side of the income tax expense entry. I'm looking for cash paid, which would be, this is what makes taxes payable smaller, right? With the cash that I pay out in taxes. So I would do a little T account math there and figure that number out. And when I did that, I would come up with the amount 38,400. I'm going to leave you to do that because you know how T account math works, right? This number plus this number minus this number gave me this number. Okay, so on my statement of cash flows, indirect method at the bottom, I'd have this cash paid for taxes, and I would just write 38,400. And I would have to mark that as an underline. And then I would be looking for interest. In our problem, we don't have an interest payable account, so I don't have to deal with that. I really am just going to pick up, in this situation, since I don't have an interest payable, I don't need to do the T account math. If I did, I'd use interest payable and interest expense. But what I'm going to use here is just the amount of interest expense and assume it was all paid in cash, except that I got to make it a net positive number. There we go. Right? You also would have any material non-cash items you would include here. So there you go. We did it. Statement of cash flows ended up to be the right numbers. Indirect method. Good job.